Patria Private Equity Trust invests in a diversified portfolio of private equity funds and direct investments into private companies, through co-investments and single-asset secondaries. The fund pursues a concentrated, high-conviction strategy of partnering with 10 to 15 leading, European general partners, with a strong emphasis on sector expertise. This is an important advantage in the increasingly competitive private equity space. Its core partners include names such as Advent International, Alta, HG, IK, Nordic Capital, PAI, Archimed, Triton, and Vitruvian. The fund has long-term relationships with them, often covering more than a decade. This strategy has proved successful, as its annualized NAV total return of 15% to end March 2024 over the last 10 years was ahead of both the MSCI Europe Small Cap Index and the UK All Share Index, and broadly in line with its close private equity peers. Private equity has established itself as an important asset class for investors, as it provides access to actively managed, attractive companies not accessible through public markets. Patria Private Equity Trust is focused mainly on the European upper mid-market, defined as companies with enterprise values between €0.5 and €1 billion, and lower mid-market, below €500 million. It also selectively invests in adjacent, and complementary private equity strategies in Europe and North America, most notably in large, mega buyouts with enterprise values over €1 billion, focused primarily on mid-market core managers that graduated to the large market, as well as mid-sized growth equity. The private equity mid-market offers several potential advantages. Firstly, many of the acquired companies have not been owned by private equity managers before, and are low-hanging fruit in terms of value creation. Secondly, portfolio exits are less dependent on the IPO market, as they have more opportunities for trade sale and sponsor-to-sponsor deals. Thirdly, deals are less reliant on funding via syndicated loans, which was muted during the recent downturn, and also often involve less leverage versus large, mega buyouts. The Trust's portfolio provides exposure to over 700 underlying portfolio companies, and is skewed towards sectors with lower cyclicality. Firstly, this includes IT companies, mostly profitable B2B businesses, such as Access Group, a provider of ERP and payroll solutions. Secondly, healthcare companies such as NAMSA, a contract research organization for preclinical and clinical device companies, with little exposure to higher-risk biotech. And finally, consumer staples such as the Spanish food distributor Uvesco. The Trust highlights that while the remaining part of its portfolio is more cyclical, it includes subsectors that offer a combination of good growth opportunities and a valuable product, or essential service with a strong digital component. It consists of sectors such as industrials, consumer discretionary and financials, and includes companies such as environmental B2B services business ACT, provider of funeral services Fu NetApp, specialist insurance broker CFC, and payments company Planet. In the coming years, the manager expects a further portfolio shift towards sectors benefiting from structural, long-term drivers, such as IT and healthcare, at the expense of more cyclical sectors. The strong long-term relationships with its top general partners support the fund's deal flow in terms of co-investments and single-asset secondaries. Co-investments offer greater flexibility in terms of capital deployment, as they are done on a case-by-case basis and capital is deployed faster, leading to higher capital efficiency and easier balance sheet management. Moreover, unlike limited partner positions, general partners normally do not charge fees on co-investments, translating into a one-layer fee structure and therefore the potential for higher returns than funds. We believe Patria's results in terms of the value appreciation of its co-investment portfolio have been encouraging so far. The fund also offers a quarterly dividend, which has grown in value in every year since 2010, and the manager charges a flat management fee of 95 basis points with no performance fee on top, which is unlike most private equity investment trusts. If you would like to learn more about Patria Private Equity Trust, please visit www.edisongroup.com.